The rand has surged in recent trade against the US dollar, reaching 13 rand 42 to the US dollar in latest trade. It's a new multi-year high against the greenback. The rally has fueled by better than expected economic forecasts out of the South African Reserve Bank and other financial institutions. Some experts have attributed the latest surge to the boom in commodity prices. They say that despite worsening unemployment figures released on Wednesday, the fact that the job losses came in slightly lower than forecast also seemed to buoy the rand. Well, to discuss this latest development around the rand-dollar exchange rate, we're now joined by currency strategist at TreasuryONE Market Risk Management, Andre Cilliers. Andre, thanks very much indeed for joining us. Welcome to the program.
Thank you, and it's a pleasure.
All right, so I mean, it's incredible to see where the rand has got to. Not so long ago, we were hovering towards 20, and I just wonder, is it a commodity story?
It's not just a commodity story, no. But let me start off by saying, isn't it strange? We normally speak only on television and radio when the rand's in the doldrums and weakening. And this time around, we continue speaking about the strength that there is. What is attributing to it? Yes, there is commodities as part of it. We have had a commodity boom. We have seen commodity prices rise significantly. We have seen results out of mining houses after the first quarter already coming out tremendously well, telling us how well they're doing. But it's also a story out of the United States that continuously say they will not change their interest rate policy. They will maintain these low interest rates that they have on the short end, in spite of inflation creeping up, in spite of inflation being above their target levels. Everybody expected them to increase their interest rates once they reach the inflation targets. Now it's actually gone beyond the target. They're still insisting that they will not change their short-term interest rates. And that simply makes investors flock into emerging markets, and emerging markets as such all over had done better. Yes, South Africa, because we're also a commodity country and regarded as a commodity currency, had more benefit from that. And we had seen that in the massive ballooning trade surplus that we're currently running. Month after month, the surplus is just getting bigger. At this point in time, the year-to-date figure stands at around 147 billion. And that simply gives us the story. That tells us that there's more supply of currency into the market than there is demand at this stage.
Our interest rates have always been better. So what makes it different now? Why is it suddenly more attractive now than before, even though we always had better interest rates?
Well, I think, as I said, it's the continued low interest rates in the rest of the world. You must remember that if you invest money into Europe, you know, when they've now issued bonds, long-term bonds, where if the investor buys the bond, then they're literally paying the government interest. The bonds issued by the European central banks and government is currently in negative rates. And as I say, that simply means that you are paying the government to take your money. In America, there's low interest rates on the long term. On the short end, it's almost at zero. It's so small that you can actually not say that you're earning anything. And no investor anywhere in the world wants to invest his money either at negative rates or at virtually nothing. And they're all seeking yield. And this time around, South Africa is getting a bit of favor because if you look at the rest of the emerging markets, Brazil really not in good shape. Russia still sits with sanctions against them from the United States. Turkey, for instance, a couple of months ago fired their central bank governor, and they are not doing well at all. So we are doing a little bit better than the rest of the emerging markets, and we're certainly seeing it in our currency at this point in time.
Where do you think we are in terms of a true value for the rand, if we can say that word? Are we still a little undervalued, do you think?
Well, I think if you look at the currency now at 13.40, and you know, there's various schools. There's some people that say that the true value lies at 13.20. Others says 13.50. According to myself, I would reckon that at this point in time we are at fair value. Any further strength from here would place us in an overvalued situation. But I have to clarify that immediately. When you speak about overvalue and undervalue, then you can look at pure, simple economic principles. But when you build in a risk premium for a country like South Africa, then we might very well be at this point in time in a slightly overvalued situation. But our risk profile starts looking better, because I think the one person that sits with a bit of a smile on his face at this point in time is Mr. Tito Mboweni. With banks doing better after the pandemic, with the mining houses doing better, I'm sure of it that he sits with a smile, as I say, because his tax collection is going to look a little bit better, and that's exactly what he wants at this point in time, to have better tax collection, to have more tax, so that he needs to go to the markets for less borrowing. And if we can do that and that gels out, then that would even bode further positively for the currency.
What could spoil the party? I mean, we have an energy crisis that seems to be manifesting. Could that be an indicator that affects the currency?
That could affect the currency, indeed. If we see an oil price shooting up, and that means that our price that we would pay for oil and the dollars that we need to pay for that would go much higher, which means that there's a lot more demand on the import side. That will negatively influence your trade balance, but apart from that, that would negatively influence inflation rates, but that would negatively impact on inflation rates further throughout the world, and everybody would have to change their interest rate policies. So that could certainly be a game changer. Apart from that, if the economy in the United States does actually explode and shows massive growth. Now, we've had two numbers. Last month, the non-farm payrolls came out as a shocker. This month, it came out below target levels again, but not as much of a shocker as the previous month. If that suddenly changes and there's a massive jump in their growth, and it seems to be ballooning too much, then they will have to move on their short-term interest rates. They would not have a choice, and that could also be a game changer.
COVID-19 must be another contingent liability, because we're getting into a third wave and we don't know where it's going to leave us in terms of all these nice economic indicators that you're talking about.
Okay, COVID-19, I specifically left that one out because I think the COVID-19 situation in South Africa, in spite of, you know, some of the negative comments that you get, is actually managed reasonably well by the government. And I think just last week when Mr. Ramaphosa announced the change to revised lockdown level 2, it was a very clear indication that they would do everything in their power to avoid serious lockdowns, and that would hamper the economy, or with that would lock down certain parts of the economy. What we need now is we need the cooperation of the public. And the public out there can actually determine the path of how bad or how good the COVID-19 third wave will be. If they cooperate, do what Mr. Ramaphosa had asked them to do, then I think the third wave would not be as bad as everybody expects it, and then we will come out reasonably clear from it. Also, we must keep in mind that our vaccination program is actually on the way. Once again, criticized by a lot of people, but I think under the circumstances, the government's actually not doing too bad on it. I myself has already had my first vaccination, and I can only speak about a positive experience when I went for it. And so I think people should stop criticizing, just work with the government and bring the cooperation. Then things will go a lot better.
My first question was around commodity prices, and I just wonder if the current trend will continue, or we're looking at some point where it's going to start to reverse again.
Well, the demand will continue because growth is on the increase throughout the world. And as long as growth is on the increase, infrastructure is on the increase, because a lot of countries are facing and looking towards infrastructure spending in booming and boosting their economies. And as long as that's continuing, the demand for commodities will be there, and we will see the prices at these levels, at these high levels. I think the fast and steep increases that we have seen up to now might flatten out, but I do not think that it will come down. It will remain at these levels as long as economies keeps on growing and things are going well. It might be flattening out a little bit, but it will still certainly have a lot of demand.
All right, so you're quite happy that we've reached fair value, and it should stay with us for a little while longer.
It looks like it. Our next technical level that we are facing now is the 1335 levels. And if that breaks, then, well, closer to the 12 levels becomes very, very easily obtainable for the currency.
Andre Cilliers, thank you so much indeed for joining us. And yeah, it's great to talk about a good story every once in a while.
Yes, and certainly it is.
Thank you so much for your time.
Thank you. Pleasure.
Right. Currency strategist Andre Cilliers talking to us about this rand that's strengthened quite significantly. 1342, I'll check that number again in a short while, but it's something certainly to be encouraged by.